All right, I'm going to make this quick because I'm looking at a real arbitrage opportunity right now and I want to run through the numbers with you. So first of all, let's take a look at this payoff chart I've got here. This is the SPY. Currently the price is 326 and this is a fake market for the SPY, which is nearer to 327, but it's virtually the S&P 500. Now this is a binary betting company, which I do not recommend anyone watching this goes and trades on binary options. I just believe that you are likely to lose 100% of your money. However, that said, and I'm not here to slate binary options trading companies, I'm also looking here at the SPY, which is the real market. And I'm saying, I think there's an arbitrage opportunity between the fake market in binary options trading and the real market. And I'd like your opinion. So let's have a look at this right now. If I go to this options table, I'm just going to delete this trade that I've got set up. And right now I've said, okay, between now and 9 days time, if I put in, let's call it $45, what will you, and there's a reason I'm putting in 45, I'll take you through that in a minute. If I put in $45, what will the payback for that be if the price is above its current spot price or below its current spot price? Right now it's saying if it's below, it'll give me 123% return, i.e. it'll give me $55 back. So I either make $55 or $56 if I round it up, or I lose 45. So let me put that here into a spreadsheet. So if it's above, I'm going to lose 45 because I'm going to bet that it will go down. So if it goes down, I should make 56. Great. So here is my potential trade setup right now. Now, if I go back here to my options chain, I want to make money if the price of this goes up. So, because I want to bet the other side to make sure that I'm covered both ways. So right now I'm going to say, okay, I'm going to right now buy an option here and I'm going to sell one over here. Essentially, I'm doing a debit spread. And if I look at the payoff chart for doing that, that means if the price goes up, I make a maximum profit of 47 versus a $53 potential loss. So if it goes below, let's call that 53, otherwise 47. So looking at that, I'm essentially making guaranteed profit from this trade. Now, if I go and say, because this return is so exponential, if I go and say, well, actually, let's bet more here on the binary option. Let's actually go and make that, let's say 47 to cover the full amount. So that 47 will return me 58. I mean, I would take these odds. It's crazy. This is bizarre. And I looked at this the other day and the return was even greater depending on the price I was getting here in the real world trading options, not in the fake market, in binary betting. Which I'm going to talk a bit more about in a second. But I wanted to bring this to your attention. Is there a real arbitrage between the real market and the fake market? And it looks like there really could be, or there is. That's what I'm seeing. Now, there's some things that I want to warn you about. But let me just show you again what we've done over here. So if I go back to the options chain here, essentially, let's just delete that and delete that. What I'm saying is I will buy an option here at the money, and I will sell the next out of the money call option over here, meaning that I will make money provided that the price remains above this level. And I have a fixed loss because I'm placing the opposite side of the trade, but slightly further out of the money. Now, if you'd like me to comment on what a credit and a debit spread is and do a whole video showing you the payoff chart for a credit and debit spread so you can understand this, just say credit spread or debit spread in the comments or something like that, so I know, and I'll go and do that video for you. This is really, really interesting here. Again, my maximum profit here is 45, my maximum loss is 54, and it even tells me my percentage of profit, probability of profit percentage, I should say. Over here, I'm placing the opposite trade. I'm saying this will go down, but what I don't understand, and maybe somebody can explain this to me, somebody who's more versed in this side of things. What I don't understand is why would the net profit here be 123% and here it's only 65 to the same spot price? And if I go and read into this, it's essentially saying if it's higher than the entry spot. So I'm saying start time now, higher than the entry spot. And it had the same ratio the last time I looked at it. Now, maybe it's saying not the current spot, maybe it's saying the start of the day price, but I don't think so because I've looked at this again multiple times. Maybe what it is because I've got a virtual account here and I've had problems with this company because I've been trying to set up the proper account and I keep raising tickets and they keep saying it's fixed and it's not fixed. So I need to keep going back to this company. I've tried calling them. I've had issues because I wanted to test this for real before doing a video. Nonetheless, I'm seeing this opportunity still, so I thought I'd do a video. Now, I'm using a virtual account here, and it does seem to be working on the virtual account, but just not the real account, which I'm still trying to understand. But I think it's because I had an account here a very long time ago, and they're trying to migrate me now onto their database and system now that I've appeared again many, many years later. I don't know. Out of all the binary trading companies there are, in the past, I found this one the best. Now, what I want to say is I don't recommend anybody trades binary options ever. I think if you go into binary option trading, the likelihood is that you're going to lose 100% of your money. And I think a lot of that is to do with the house having the edge. However, when I see something like this, even on a 50-50 distribution, this doesn't make sense to me when I compare it to the actual market and the fake market here. Let me know what you think. I'm interested in a skeptical point of view. So are you skeptical on this? Or does it pay to actually try this? Does this look real to you? Does it look like, hey, actually, yeah, the fake market, i.e. the binary options trading markets, may actually be using different ways of pricing those returns compared to the real market? And if so, why? Why is the payout here higher than the payout over here? And if so, by the way, we're talking about guaranteed profit. Now, bear in mind, there is this sliver here where it could fall just between. So either you're going to make money on both trades, if that happened, or you're going to lose money on both trades, but the two should balance out. So I'm really, really interested on this. Let me know what you think. Talk soon.